Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 1.1%. There on the S&P Nasdaq 1.6%, semiconductor 1.8%, Dow 1, Russell 2000, transport, banks, healthcare, home builders, utilities, retail, emerging market, every single sectors are red today, except the fact that we got the energy up 2%, biotech slightly green there, Bitcoin up, gold, silver, miners are down, dollar up, oil up, treasury bond up, VIX popped a little bit. Let's stick with the S&P 500 ETF. Spider! 65-minute chart here. So this is what we closed yesterday. It looks like we saw another down gap this morning. With that down gap, bears were able to open another gap that has not been closed, and things are starting to get really hectic here for the buyers. You can see the midterm and the short-term moving average now back to supporting the sellers, and with that, as you can see on the first hour, second or third hour, I mean, we did see that 378 level holding here pretty much all throughout the day. This is a level that bulls desperately seeking to protect here. We did see a little bit of pop, but obviously not enough strength there. My short-term moving average coinciding with the gap area, that double resistance was too much for the bulls. You can see on the last hour just puked right back down. At this point, the best case scenario, just because this level's been acting as pivot for some time now, and bears are kind of having a hard time breaking below it. So going down and feeling this get the entirety of it will be in the best interest of the sellers to dismantle the support, then making these little pops here for the buyers. Obviously, if you're a bull here, you desperately need to make sure that 378 is protected and make sure that this level doesn't get filled. Let's check out that oscillator. So to make things worse here for the buyers, now we have bearish divergence to make things that much heavier for the buyers to prop itself up. Here, as you can see, that oscillator didn't even aim to get back to that previously known oscillator resistance. We actually prematurely crossed back down today, and with that we got the lower high on that oscillator, and with that down gap, with that little pop, wasn't able to be sustained. This down gap still open, and the bulls are just trying to find us any kind of protection here in this vicinity. It looks like though we might be arriving right here. This is what previously known as the oscillator support, but this time around bears gather a little bit more weapons here to battle against the bulls. With that bearish divergence, things are much looking very much stronger here with the bearish sentiment that bears are representing here. So I think objectives pretty clear. Bears need to fill this up gap once for all and then continue to advance to the downside. Bulls desperately seeking to protect it and somehow need to get back up and fill this down gap that was open. If that down gap doesn't get filled, expect volatility going forward. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening of trading tomorrow.